Hey you guys, happy Tuesday. We're going to do a quick recap, courtesy of Colton. Thanks for asking for me to make this. We're going to go over the fair value gap rules that I posted yesterday, and kind of how it pertained to how the market moved this session, and kind of how things maybe are different on days like this where we moved a ton versus normal days. So we're gonna go over all that. We're gonna go over just kind of how my trade plan, how I posted it last night, and just how it ended up working out, and why I was willing to take that risk to make the big reward that I got today. So we should keep this pretty short, sweet, to the point, but first thing jumping in, and going over today and looking at the fair value gaps, right? We had a fair value gap from several days ago. This one did not develop on, yesterday. We did finally get up. We filled that gap completely, and then obviously came back down. One of the things Colton had asked about was, he goes, okay, well, this fair value gap, it formed at 8:45. And the thing with a fair value gap, again, no fair value gaps. He actually showed a chart on TradingView, and was like, this one formed during pre-market, I want to say. None of my fair value gaps using the ICT FVG, which is the fair value gap indicator that is free. I've posted plenty of links in Discord, on the 30, these are 30-minute gaps, right? I've explained that again quite a bit of times. These gaps were formed at 8:45 a.m., which is during regular trading hours. So first off, that's like the least probable ones that we'll end up filling. But if we do fill them, they're either going to be a reversal at usually 10:30 Central Time, or it's going to be at approximately what would that be? 1:30 p.m. Central. So you're either looking at 10:30 a.m. or, like I said, 11, 12, what is that? 1:30 Central Time is usually when we'll get reversals. But here's the thing. What was different about today? One of the big things is yesterday we consolidated quite a bit. We had made, if you zoom out and look at how the chart is right now, first off, today was a news event. It was a news day, right? This move up was driven by a news event that came out at 7 a.m. Pacific, so 9 a.m. Central, and that was the JOLTS, the jobs report. But we had dropped quite a bit. This was a massive drop down back on Thursday. This is Friday, Monday, Tuesday, today. And so we had some room to move up. We had obviously more news and everything back on Friday. So then we get to Monday, we see this consolidation, and we filled those fair value gaps. Well, going into today, we did not have those fair value gaps that needed to be filled here on the ES. And one of the other things, Colton, even if there would have been a fair value gap during the pre-market session, one of the things I'd mentioned about these rules is that you have usually 1 to 2 ATRs, or average true range. When you get past a point, almost like it's past the point of no return, meaning you move so far away from that fair value gap, the likelihood that we traverse back and fill that specific gap just becomes unreasonable. That's the first rule. And then the second rule with that is, on a news event day, those rules aren't as prevalent. They're not going to be as strong. Why? Because the market does not normally move. I mean, we saw a range today of 44.34 up to 44, let's call it 45, let's call it 45.10. So we'll just easier to give a good range here. So 34, that's like 75 points approximately, right? That we essentially moved. Hopefully my math is right on that. That's a lot. That's not normal. So general rules that we have, especially, even if they pertain to fair value gaps or anything else, we generally chop 70% of the time, right? So these big moves aren't going to be normal. And when they do occur, usually you don't have to worry about, retracements and things like that. And that's exactly why we did so well. So ES did extremely well. NQ, same thing. I used this KPL from yesterday, KPL1, and did not take any shorts on it. I'll show you Discord here in a second. And I got the long, somewhere probably right in here. We did have a fair value gap. This is a great example though. And this is a different indicator, so it doesn't really count, but this is a good example here because I can show you what I mean by that rule. Fair value gap formed at 3 a.m. What did we do during that same session? We moved through it. We did move through that fair value gap. And again, it's going to be dependent on the time frame that you're using. So remember that as well. But great example. These were old fair value gaps, from before. They go back multiple days. These gaps did end up getting filled. And we just continue to move up. And you're like, well, why is there no retracement again? Biggest thing is, A, it's a news day. B, the average true range. If we don't make any big moves around 8:30 a.m. Pacific or 11:30 a.m. Pacific, give or take 30 minutes on each of those windows, and it just continues to move, I mean, that's a trend day. That is a trend day, and you want to react according. So based on all this, I mean, we could go in and we could look at another fair value gap here on Y. This is actually a really good example here. We're going to take YM. So one of the big things with YM here is we did have this fair value gap that formed. This is, I think, rule number 3. We had this fair value gap that formed here right towards end of day yesterday, right? What did we do? We came down, we touched it once, we touched it twice, we came down, touched it a third time, we filled that gap, and then we ended up breaking up. So that is a rule that's fairly prevalent. That's a strong rule that normally if there's a fair value gap that forms towards the end portion of the previous day, that the following day we fill that gap. Again, we were within 2 ATRs of that price. We came back down, we retraced it, and then took a rip up. So that is how those rules, kind of work, correlate. One of the things I want to kind of show as well is if we go in here to Elite Chat, one of the things I was saying last night when I was posting my KPLs here is I just said, I'm going with a complete unorthodox method to ES, NQ, and YM. I'm not taking any shorts off the upper KPL, so only taking longs, and I'm all in on longs working out today for today's session. You saw how it did, right? We might, this might bite me in the butt. That's very valid, could have. I have only 2 stops turned on for the overnight while I'm not at the chart, but hopefully, it doesn't happen. And then I'll get the run up. So if we look at, ES, these were I took the previous day's KPL1 as my upper one. And then I took KPL3 for the lower. What we did was we actually unfortunately, we came up here, we hit the upper buffer zone. I got long, then I got stopped out. Then I got a long off of this lower KPL, and that's how I was able to rip it up on ES today. If we take a look here at NQ, we never got above this buffer zone. I used the fair value gap, so I used the previous day's KPL1, right? And if we want to look back at the chart real quick, we can see where here's KPL1. This was the buffer zone that we were using. Never got above my KPL. We came down. I never went short because shorts were turned off. I got the long and then rode this mother up to high heaven, made a couple hundred points on this. And then if we go back to YM, unfortunately I took a stop on YM. I got, that's NG, where's YM? There we go. I got long early on in Globex on YM. We came down, stopped me out. Then I did not take the short, but then we ripped up and continued up and made back my profit. So if we want to look at NQ, where's NQ? Or YM, pardon me. YM, I used the previous day's KPL as well. And you might go, well, Cameron, why did you use those KPLs? If we look at YM here and you're using this KPL, why didn't you use KPL1 and KPL2 from today's session? Well, because again, I knew how wide the buffers, I knew how wide we're normally looking for the average range, and we're looking to short this or then take the long. I knew personally with much greater certainty that we were going to see a move up today. And again, why did I know that move was going to occur? The big reason was we had this consolidation factor. We had the jobs report coming out. we had filled a lot of these buffers, or sorry, fair value gaps and things like that over the past several days, and we were seeing upward momentum. I mean, we were taking out targets and we were basing, that's what yesterday was about. So I was able to, using that knowledge, take a higher risk trade instead of just using, KPL1, KPL2 on YM, and then just capturing a fraction of this and taking a stop out. I was willing to get a little bit more chopped up here to catch a larger ride up on the long side, and that's how it worked out. And so sometimes you have to take on a little bit more risk in order to catch big moves and catch big movements like this. The rules that I've outlined really have helped me. They really time frames, knowing, this year, I keep saying this year is different from last year in the sense that last year you could set the bot, you didn't want to touch it, you want to just let that thing trade. This year we've had to improvise. You've had to understand liquidity zones, imbalances. You've had to understand, wicks. You've had to take stuff off at certain points, right? And going along with that, you have to know when to let your winners run. That makes trading harder. But one of the things I've done is I've created rules for myself by looking at these charts, going back day after day, week after week, month after month, and looking for these trends and taking screenshots. I mean, I'm literally taking screenshots of these charts, and I would say things like, I post, for example, right? I post these key levels every single day. Anyone can go back and look at some of these key levels and go, okay, let's use some of these key levels and spot patterns so that we can trade better. We can go to the NQ key levels. These are also posted for everybody in YMI, and you can see, okay, this was a good base for, for support or whatnot. I wanted my entry to be slightly out of a chop zone. And so I went with the higher route, right? Using this data and just constantly day after day, creating basically a playbook, a snapshot of every single one of these charts so that I can go, okay, when is the key turning points in the day? The key turning points, again, from what I've seen is 8:30 a.m. Pacific, 11:30 a.m. Pacific, and then using these other key levels, using the fair value gaps and going, okay, are we at a fair value gap? Have we filled these other ones? Have they not been filled? Just a simple checklist. It doesn't have to be, I know it sounds like it's daunting and it sounds like it's a lot of work, but it's just consistency, looking at those things will get you to the point where you don't have to watch the chart every single day. It might feel like that, if you go, well, Cameron, I loved when we could just set the bots, forget about it and let it do its thing. Yeah, it would be nice. It would be great. I wish we were at that stage right here, right now, but market conditions change. Things get different and we need to maximize our potential. And so one of the ways we can do that is with some of these these rules that give you the highest probability to make money in the market. And today was just a good example of that. It could have not worked out. We very easily could have been sitting here and I could have been telling you, man, I got chopped up. I got chopped up quite a bit. And, we moved up and then we came back down and it was just a dud of a day. That would have been very possible. But here's the big key with this as well. You have to take situations, that's always possible. That's always a possible outcome for any given day, right? The markets are random. But what you have to do is find little golden nuggets in the market, like the fact of how the market moved the previous day, to then make and base your assumptions for the next session on a scale of probabilities and go, we have a higher probability here tomorrow to see something happen. I'm going to try to take more advantage of it using a few instruments. I didn't do this exact strategy with every single one of the 13 instruments that I post, right? I took advantage of it with 3 instruments, and it ended up working out the best on NQ, good on ES, and decent on YM. But that's the way the cookie is going to crumble sometimes. So hopefully this is helpful. This is a good example of how to read the fair value gaps and use them, and how different days again are going to mean different things. I think my rules, I'm not backtracking on anything. I think my rules were spot on for what happened and occurred today. Again, you could go, well, Cameron, fair value gaps, occurred during regular market, but again, remember the news session. It's a big thing. There was a news catalyst. And then also remember, ATRs. If you continue to move past that range and at key time points throughout the day, we're not reversing, we're not seeing any reversal signs, we're still seeing strong bullish momentum to the upside, that's a sign that we're going to be in a trend day. And that's exactly what we saw not only on ES, but on NQ, YM, RTY. We saw that on every single instrument across the board, right? And why, I guess RTY, you could have really done well if you would have popped off here on KPL number 3. So anyway, hopefully this was helpful. It was a little longer than I expected, but let me know if you got something out of this, and I'll catch you guys in the next one. Bye.